Your note in May that I've got says just fast forward to fiscal year 2022. So you're looking way past all of this. Is that just because the theme park reopening is just going to be so spotty and uneven? It'll be hard to judge?
Yeah, thanks. The pandemic and the time for it to improve. And then secondly is just the economic cycle. And typically when the economy is weak and unemployment is high, the parks tend to suffer. And so it's a combination of both, right? So it's not one or the other. And that's why we think it's going to take a couple years for it to get back to pre-COVID levels of profitability.
At the same time, a lot of the streamers are getting the benefit of this market of people being at home, and Disney Plus certainly falls into that bucket. Although you and others have made the argument for so long that Disney Plus is something that Disney has to spend money on, and it won't necessarily add too much to the bottom line, at least initially. How much credit should we give in Disney's valuation to that right now, given the headwind of the parks?
Yeah, I mean, that's the essential question, right? So you have a business that's early, growing nicely. It has no profitability because it's so early and so invested. We think it could be worth, 50, 75, $80 billion. And the stock reflects some of that in it today. The offsetting issue is, well, what's the risks to theatrical and to theme parks and to ESPN, which is, the much bigger source of cash flow. So right now it's a balancing act. And because things are so tough at the other businesses that are really valuable in driving cash flow, we're neutral on the name just because we think the duration of improvement will take a while here.